Jim, we are in the thick of earnings season. IBM came out with their earnings. Not bad. Now, when you look at the chart of the stock, the stock's been kind of making a steady climb up.
Right.
So is there still some steam, some room to move here?
Yes, I think this was a remarkable quarter, and also puts to rest this notion that unless you have phenomenal revenue growth, you shouldn't own the stock. I mean, people have to go over this conference call. What they do is that they're doing okay sales, not great, but they are making fortunes with the sales. So you take software, 90% gross margins. You take all these different acquisitions they've made, they're slotting them in, they're really growing them. You take what I regard as being the true emerging markets, and you see that their growth in the emerging markets is extraordinary. So you have a company that had set a very ambitious goal that a lot of people scoffed at 5 years ago, that they could earn $20 by 2015. Now I think that that's not even a stretch goal. I think that's easy. Why? Because they have the products that a lot of companies want. They offer a tremendous level of service. And if business actually picks up worldwide, you're going to see the sales number climb. I mean, they are a bit of a GDP play. So when the number came out, a lot of people were saying, well, why is that company going up? I mean, didn't they just miss?
Right. People seem surprised.
Well, I mean, the notion of missing, and I've been commenting on this quite a bit in Real Money and also Man Money, missing is something that you can't determine until you've done a lot of work. It's no longer like IBM misses. I mean, there was a lot of stories about Google missing. Well, Google didn't miss. The metric that we needed to see, which is how they're doing in mobile, was good. The cost of acquisition, they were good. So don't be so lulled into thinking that a headline is going to produce a trade. McDonald's reports a number that's better than expected, but the guidance wasn't good.
You had to read all the way down to the bottom, and that's the key, is like you said, a lot of people stop after the first two or three paragraphs, and then all the good stuff is, the real stuff is at the very bottom where they say, oh yeah, by the way, guidance
was good. You know, look, it's a funny, I'm at a funny point in my career. IBM last night and Google, okay, I knew I had to get through them. I had a lot of other things I wanted to do, candidly, just a lot. But I knew that I had to get through them so that I could be able to answer your questions, be able to answer callers' questions, be able to write. And it was really hard. I mean, Google took me an hour and 10 minutes, IBM an hour and 15 minutes, and most people don't want to do that. They just don't want to. And I can't blame them. Maybe they just don't feel it's that important. But if you want to know why a stock goes up or down, you've got to read that, and you've got to read the notes, and it's a big drag.
Right.
But if you're going to be a pro, you got to do it.
All right, so IBM, would you get in here?
Yes.
Okay.
I mean, I own a fractional alerts, but yes, the answer is I would get in.
All right,
and
IBM.
I'd hope it come in, I'd buy some more, because IBM is selling 10 times earnings. I had a moment today with Melissa Lee, where Melissa Lee was saying that an analyst, I don't even know, was saying that it's overvalued. Use a low price target. And, this is an example where I've been around longer than the analyst, know IBM pretty well, own a fractional alerts. And sure, if the market just craters, that stock can go down. But it was a good quarter. And unless you understand the nuances of this market, you're not going to make a lot of money.
Where do you think it could go?
How about 12 times? Say it goes 12 times 2015. No, I mean, it can be.
It's 10 times now.
20,
it has the
right. It's going to earn $20. Okay, it's going to earn $20 in 2015, and so 200 plus another 2 multiple points, and you get to where it could go. It could only go to 240 over time. Okay. It is not a company that does these kinds of moves. These kinds of moves were predicated giant move because it was supposed to miss, and it didn't miss. Mm-hmm. The last quarter was bad. We did another video about Coach. I mean, the last quarter, inconsistent. IBM had been consistent until the last quarter. And in that quarter, they told you they had some orders that were pushed out. And what happened is we discovered that was true. A lot of times companies say it, and it's not true. It was true in IBM's case, and that's why the stock's going higher.
All right, so Jim's saying you can definitely take a look at IBM looking good here.